tutorial, I will show you about MRTN symbol. I'll copy that, I'll paste that and write stock beside it. And you can see the name and you can see the market cap is in millions. It's nearly billion, so it's a big size company nearly. And you can see the dividend yield as well, which is 0.66%. And dividend yield, even though it's less than 1% even, but it's a good sign because it means that after paying their creditors loan liabilities, they still have money left. That money is paid off to shareholders, so it shows that they are financially strong because after paying their costs and everything, they still have money left, so they can pay that to shareholders. So this percentage is the money left that they have, so it means they're financially doing good. And this is the amount from Google. That means that if I buy the stock right now, I have to pay 18.20 US dollars per stock. And you can see it was founded in 1946. And okay, and what else? So I'll just copy that exactly. I'll copy that and I will paste that, and I'll write Indeed reviews to see what the employees have to say about it. I can see there are 353 reviews and it's 3.3 star. You can just go through it, like the reviews yourself, and see, read through it, what employees like about it. And that's fine. And then you can just see the reviews in Glassdoor. And I'll just show you right now. So I will just show you. Uh, so you can see that there are 132 reviews in Glassdoor and it's 2.7 star. And just make sure you read through the reviews, you know what people think about it, employees working there. Then you just go to Yahoo Finance, and I want to show you the executives as well. So I'll just click there. I will go to profile, and then I will just see the sector, industry, employees, and I can see there are key executives, 5 key executives, their title, their salary, and I can see that one salary is not shown, of secretary. Maybe it's not applicable. You have to find out why it's not applicable, what, like maybe some other website has covered it or whatever. So you need to find out that. And that's very important. And so that's very important to know, because the more transparency, the more information we have, better. Then I'll go to Justia patents. It will show me the patents of this firm. And you can just see if there is any patent of this firm. I can't find any, but I'll just make sure. I will just copy this first part maybe, because sometimes the name has things. No, I can't find any patent. I can't find any. So I guess they don't have any patents. But see if you can find any, because I can't find. So because patents are important, because it acts as a moat. It makes the company stronger against its competitor. So the more patents the company has, the better, the stronger it is in the market. So you can just search yourself. I'll go to macro trend. I want to show you. Go to price ratio, price book ratio, and paste in the symbol, and or the name. And this website loads, takes time to load because it has a lot of data in it, so you need to be patient. It's a brilliant website to find out the ratios. I have left the link, but if you have any questions, or if you're stuck somewhere, or if you want me to slow down in the videos, please let me know, and we can just find the solution to it. So it's just loading. I want to look at the price book ratio of this stock. Okay, so if price book ratio is less than one, that means that the stock is very cheap to buy, it's undervalued, and it's at discount. It's ideal time to buy. You're getting something at bargain. If it's one, that means that you're buying something that of the real value, its real worth, so it's not expensive. That is good as well. If it's more than one, that means you're buying something expensive. The higher the number goes, the more expensive it gets. We want to see the number. It's 1.71. It is expensive. The stock is 1.71 times more expensive. In 2017, it's 2.41 times more expensive. If you just go vertically up, and you can just see that people who bought in 2017 September, they paid $20 to buy something that was $8 worth. So they paid a lot of money. If you see that in 2012, it's 1.06 times expensive. People paid, somebody who bought that time, they paid 6.54 to buy something that was $6.17 worth. So, it's a little bit difference, but still they bought a little bit expensive. So, but right now it's 1.71 times more expensive. Let's look at other ratio and let's look at current ratio. Current ratio, if it's less than 1, the stock is very risky to buy. It's not safe, it's very risky. We are looking for 1.5 or more than that. This makes stock less risky. So look for ratio 1.5 or more than that. And it's just loading and then we'll have a look. So we are looking at 1.5 more than that. It's a lot more than 1.5. And that means it's not risky, it's very secure. Let's look at the previous ones. We want to see if it yes, so in 2017 September it's a little bit less than 1.5, and then in 2017 June it's a little bit less than 2005 1.5. Then previously, it's fluctuating, you know and then it goes up and down, so it's not like, I wouldn't say it's like a fixed thing, but it's not going very below 1.5 little bit points, so it's up to you to decide. But I would say that since 2017 December, it's always been up from 1.5. So since 2017 December, so it's nearly like 1.5 years, it's consistently above 1.5, which is brilliant. But 1.5 years is not a lot of period. At least it should be 5 years time. It should be consistent. So it's up to you to decide, because even if it's going down, then 1.5, it's not that down. So it's up to you to decide, I would say. And let's look at debt equity ratio. I'm looking for zero point 0.5 or less than that. and I'm looking for zero point 0.5 or less than that, and it's less than zero point 0.5, and consistently it's been less than zero point 0.5. And yes, since 2005 up till now it's always been less than zero point 0.5, which is brilliant. It means it's a not risky stock in terms of debt equity ratio, so it's very safe. Let's look at return on equity. I'm looking for 8% or more than that. Okay, so it's more than 8%, and if I just look previously as well, it's consistently more than 8%, but then it's fluctuating as well. So it's up to you to decide. Since 2002, it has been above 8%, and then in between it was a little bit below 8%, and then again above 8%, and then little bit below 8%, and then above 8%, and recently it is above 8%. So it's up to you to decide. We're looking at 8% or more than that.